Is just before 2 o'clock on Friday the 1st of July 2022. I would have hoped to have done this video earlier in the week, but sometimes real life, so to speak, gets in the way, and it didn't happen. So just looking at the curve here for the past period of time, and you can see that the market had been lower than it is currently. It's still down 0.5% on this time last week, but it does look as though it is currently trending upwards slightly. Now it remains to be seen whether that means that the bottom has passed or not. But irrespective, as you can see, we're currently sitting at minus 4.3% on our investment. So the current value of the investment is just below £1,400. We're going to go ahead as usual, buy our weekly £120 worth of the Vanguard S&P 500 exchange traded fund. That looks as if it's going to buy us just over 2 shares at the current rate. There was a very slight downshift there in the average price, and our loss, our existing loss, if you like, has reduced a little with that dollar cost averaging. So just down to about 3.9% there currently, and we will see how it goes. I've mentioned before this gap here between the sort of the current price and what was the longer term trend. I call that the opportunity. And I suppose if I had been sitting on a pile of cash, waiting for an opportunity, I would be certainly thinking of investing it in greater quantities at the present time. I mightn't say that I would throw it all in at once, but I would certainly be thinking that this current price compared to the sort of value that you would expect perhaps if the trend had continued, I think this is good value, and I would be buying. Well, I am buying in real life, and when you buy at a lower price than what you had previously bought, you are basically you're getting good value. The market will recover in time, and we will benefit from that. Guys, that is it for today. If you want to follow the journey, please subscribe to the channel. If you liked the video, thank you very much. Please hit the button, and let's see. It'll be interesting to see how long is the market going to take to recover. I've probably said before, this was the COVID effect here, and the market dipped in February 2020, and it was back up to around about the same value as previously by about August of that year. So that was a dip measured in months. From looking at historical values and when crashes have happened and recoveries subsequently, as far as I can tell, on average, or maybe average is the wrong term, but the vast majority of recoveries seem to be complete within about 2 years of the market crash, and the majority of those happen even sooner than that. So this, I'm going to call this a dip more than a crash, because to be honest, it's been pretty gradual. Now that's not to say that it couldn't continue, but I don't see this lasting. I don't see it taking a further 2 years to get back on track, to be totally honest with you. As things stand there today, we're at about the value that we were at this time last year. Actually, you can see down the bottom here, it's sort of 0.5% greater than it was this time last year. So, yeah, I mean, the dip has kind of pulled things back a bit, but it's not as bad as it could have been, and I think there's hope to be had. Guys, I will end it there. Get this uploaded and have a look and see what else I need to be doing for today. Hope you have a great end to your day and a good weekend, and we'll do it all again next week.